All right, guys, bear with me as I cover Fibonacci with you. Primarily, we're going to be projecting profit targets with Fibonacci. We're going to look at our daily chart. We're going to look at our hourly chart, and we're going to try to determine whether or not we are long or short bias. Okay. For me personally, this is a daily chart, an hourly chart, and a 15-minute. For the daily chart, I'm looking for the overall trend direction, and direction bias comes from that chart. I'm going to choose my stance on the daily chart. The hourly chart is going to help me confirm my stance and just give me a little bit higher of a view to make sure there isn't anything overextended or in the way of the stance that I've chosen. So as to confirm or deny my stance, the 15-minute chart is where I trade. So we're starting on the 15-minute chart because that's where we're going to use, primarily going to use our Fibonacci projections. We will use Fibonacci on other time frames, but we need to master it here first. So that's what we're going to do in this video. So when we do Fibonacci projections, the deeper we measure, the less of a profit target that is required. So, for example, we have this skinny channel right here, and price pretty much broke out right in here. Really took off down here, but this is about the 12:15 a.m. candle. It's got a lot of steam behind it relative to the past. So once this thing broke out, we can see we have a skinny channel here. So what that tells me is my projections are only going to throw out a 1.618 extension, a 2.618, and a 423.6. I can add a few more. In fact, we probably will add a 382. But right now, based on this skinny little channel, I know that I'm probably going to be going for one of my bigger extensions, and that's what's going to help me achieve 3-to-1 risk. So let's do this. And then keep in mind also, I'm going to pull up to project down, and I'm going to pull down to project up. Right now, I know on this day I had short bias, plus my candle moved out and confirmed. So what I'm going to do is I'm going to grab my Fibonacci. I'm going to kind of look at the bottom. I think I'm going to ignore this little step right here and just get this firm channel. So I'll grab, since my low is since it's so tight here, I'll probably grab this low, which also kind of has me line up over here. So I'll grab that low. I'm going to pull up to, this move up here. I probably have to zoom in to really see this, but let's just kind of ballpark it in. In fact, let me zoom in a little bit so we can see it, because it is it's narrow. We're going to go again Fibonacci. I'm going to grab that low right there, and I'm going to just go up to, right at these two highs right here. Let's see here, maybe even this top right here. So we'll click here, pull up to right about there, boom. And because that's now, if I had pulled a big wide channel, I'd probably be looking at my 161 and 261.8 as a target. Because this is so skinny, I'm looking at my 423.6. I think we got 50 pips this day. Let me see. We are at 80, 10, 20. So we're looking at about 20, 40, 60 pips, 65 pips on this day. And this thing moved even further, but these are the only projections we're using. And I don't think I'll ever go beyond a 423.6, but I will put a point through. It's a 382 of some numerical fashion in there, and I'll show you how to do that in a second. So the bottom line is once we throw out our projections and we confirm that we can enter this trade based on our stop and our profit target because it's better than a 3-to-1, then we pretty much just enter the trade. So for example, in this particular case, we have some definite, this one is definitely going to have some higher risk, but the reward potential is there. And I say that because we're 20 pips between squares. At the soonest we would be able to get into this at 1320, and our stop, we're going to have to go, I'll show you where 1310 is. I'm sorry, let's see. 1330, so there's 10 pips. So if we entered here, our stop would have to be here for 10 pips. So this might be like a 12 pip stop, okay? And so we would need to make sure there was 36 pips in the game before we could enter this. and our profit target is 423.6. All right. So keep in mind that when price opened up, you didn't know any of this was going on, right? I'm going to just kind of cover this again real quick. All we had was this breakout right here, okay? Because this is when price moves, okay? Between about 11 and 1 a.m., sometimes 10:30 p.m. So 11 p.m. and 1 a.m., it's been the case for the last couple of weeks. This is really truly the breakout candle. We could say some of these were in here, and this was really a strong short bias day. So we could have actually, and it would have been similar results, we could have actually, probably more favorable as far as a risk profile. As price is coming down here and we cleared the channel, we'll call this. This is really the support level. Let me draw a line. Let's see here. Boom. I'm going to kind of just, okay, so that's pretty much, so if price kind of broke out here, we would have to go, let's see here, boom. We'd probably end up entering about 1328 and 38 is right here. So if we entered here, if we did, we'd have been stopped out right here. However, to enter here at 10:45 p.m., just notice there's not much steam. I usually want more of a move to confirm the move. The alternative is this, and this is what I call skipping signals. And I'm kind of getting into something I didn't want to get into in this video, but and this is such a narrow channel, it's kind of hard to. There we go. Let's do that. Okay. So as price is making this top, double top, triple top up here, we could actually, as soon as we confirmed the break, and I did this twice in the last 2 weeks. As soon as we confirm the break of that level right there, that confirms that swing, almost a head and shoulders top, but not quite because this ain't high enough. We could short this here, set a stop up here, and then grab our Fibonacci retracements, grab this low, look at these highs and kind of average them. Okay, so I'm going to go right about, my mouse ain't moving, sorry. There. So I almost touched this, kind of touch all these and almost touch that. I'm going to flatten that out a little bit. So we'd be short right in here with literally an 8 or 9 pip stop here. This is called skipping a signal. So we're doing it before the breakout, and we're just assuming price is going to go in our favor. And then, of course, we reach our goal right here. And this right now, currently, we're instead of 20 pips, we're at, really it's 5 pips. So this is like 5, 10, 15, 20, 25, 30, 35, 40, 45. That seems a little bit more like how I did that trade, because the other way was 60 pips, I think we said. Looks a little different like that, you know. Okay, we were kind of like this, right? So that's an alternative that you have. You can, you know, sometimes at 9:30 p.m. you're tired. You have strong, this is only when you have strong bias. You have strong bias. You can pick your direction. It's kind of like I've taught before. Okay, I've taught this before where price is moving up. Generally on an up moving trend, we want to enter as price breaks the highs. But if price pulls back, and every time it takes out a high, it doesn't make much headway before pulling back. So here we took out the high, a prior swing high, and it moves up a little bit before it pulls back again. Okay, takes out the high just a little bit before it pulls back again, and keeps doing this, right? It's kind of a slow move up. So if we were to enter these at these highs, as price moves up and comes back, with an option, when you get to here, you're down. The risk is generally too high. So when that happens, but price is still trending up and it's in a nice trend, what we do is instead of taking a break of the highs, we take a break of these 3 candle break on the swing low. And this puts us into a much more favorable risk profile as price makes its way up. Very often as price takes out the high and pulls back, you have to be stopped out because risk is too great right here. So when that happens on a move up, you take the lows. In similar fashion, as this thing begins to move, bouncing on these highs provided we begin to enter the high volume area, which is about 10 p.m.-ish, okay? As price moves down, as long as we have some real strong short bias from our hourly and our daily, we can skip the breakout, not worry about the breakout necessarily, because that takes much longer to happen, and enter on the bounce, on the 3-candle break, and probably have a much more favorable risk profile because we can have a much tighter stop. All right, enough on that. Let's go like this. Shut that off. There we go. Drawing, pointer, delete. So what I want to do now is kind of go back in time a little bit, put this back on auto, and I want to show you how to pull these different. All right, so I got a few days here. And let me just show you, by the way, for example, today and yesterday were not good, but the prior 2 days were excellent, okay? Plus 50 pips right here, and I want to say 30 pips in this area right here. And then what's happening right now, and the reason price is kind of indecisive, is because we made an extreme move and we're just kind of hesitating. And this is one time where you can begin to consider skipping signals because you don't have the bias. Let me show you. Here we are on the daily chart, and if we zoom in a little bit, you can see we made this huge move down, and we are kind of, indecisive. I would expect some form of retracement, and if we were to grab our Fibonacci retracement tool, we can project the retracement. I would have to use, I might just use this high. And, one might come here and come down here and look for a retracement, and that's doable. What we're looking for is, let's see here, a move down and a move up before it moves down again, right? And that would take us to the 50% retracement level. So after a huge move like that, I would expect some retracement. If price does not retrace and just kind of meanders to the right, that's even more bearish. If it just kind of moves like this and gets all sideways and then takes off, then of course as soon as we take this out, we are extremely bearish again, looking for bearish confirmation on the daily chart, and then of course entry on the 15-minute. Okay. Your other option, of course, is to drop this down and use just the impulse move. Because remember, this thing came down base sideways, then moved down. So it'd probably be more accurate to measure this from here. Remember, guys, a couple things. And this is just going to take practice to remember. When price moves down like this or up, okay, generally, especially if it's a big move like that, we're going to see some form of a retracement. Okay, if we make it all the way back up to here, that's a 100% retracement. So we want our 0 to be down here and our 100 to be where we started. Okay. So if it's ever opposite of that, just know you laid them down wrong. My early days of doing Fibonacci, 50% of the time when I laid them down, I was wrong. And I had to go oops and redo them. Just remember, you're measuring the retracement. So it should grow as you move up. It should go 23, 38, 50, 61, 78.6, and 100. Okay? So by measuring just this wave, it gives us a more shallow target of 50% right here. Oops. Right there. Which puts us at right here. So, if this candlestick got kind of white today, we would, by tonight, we would be bullish, and because we're kind of taking out this high right here, a little lower, but we're taking out that high, and we're going to be bullish up to that point. But the other thing that it can do, and very often it does, is it just kind of bases sideways, or it could completely rock and roll to the upside. We don't know what it's going to do. We can only project at this point. So that's our retracements that we like to project. And then, of course, I want to show you the hourly chart to show you kind of what's going on, because the hourly chart gives us a really good view of really where we're at, kind of a mid-range where you're at. Let's take a look. Okay, now look at that. Now, what I'm showing you here is for another video, But take a look at this. Let me move you. Okay, you're already there. All right, big move down, kind of a rest, big push down, and we're just kind of like yucking to the side, okay? It's actually a highly technical term, yucking to the side. So just not a lot going on, you know, and look at how that hourly chart helps. Your hourly chart is your key component to confirming your bias. So where we said we got kind of some long bias, we kind of need some steam from this hourly chart to demonstrate that long bias. Otherwise, we really can't expect much from the 15-minute chart. And that's why for 2 days, nothing's going on. Okay? You can avoid this sideways price action and these stops by really using that hourly chart. Okay, and that is for another video. Let me see here what video that's going to be. All right. Anyway, so what we want to do now is let's take a look at this one, because we had short buys, strong short buys on this day as well. And let's see how that fared for us. This was actually a losing day. And kind of here's how it went. Here's our breakout candle. And this happens a lot, guys. This is kind of the crux of the system right here. A move against you, kind of to take you out, and then the move happens. It's not totally common for it to happen like this, but this will be your angst on this system. This will be what ticks you off. But the beauty of the way this method is set up is that you have 50 to 70% unsuccess is still going to result in profitable trades. 50% and you're doing great. And you can maintain 50%. You hit 70% losing win-loss ratio, you're still going to make a little bit of money, okay? You're not going to get rich. It's not going to change your lifestyle much. But it can if you ramp up your money management, stick to the money management rules, and ramp up the amount per trade. You can still make good money. All you got to do is do the math. It's a simple formula. But here's how this goes. This is basically the breakout candle. And if you look, it's got a tail right here. But on the breakout, it was a nice black candlestick down here, okay? The channel's a little funny, but it's not sideways enough for me to do anything weird. Every now and then, I'll take a trend line. Let's say it was a real sideways channel. What I'll do is I'll find my tops. That's ballpark my tops. And then what I like to do is I like to duplicate the drawing to keep the same exact angle, and then I just kind of come down low. We could call that, let's say that's the channel right there, okay? But pretty much, you can grab these highs and these lows and forecast your move. And another way to avoid this loss potential is by, around the breakout time, entering on the highs for short, okay? Like we did earlier. But I didn't do that in this case, so let me just show you how the loss took place, okay? So here's my channel that I'm going to measure from, and if I'm short biased, I'm going to pull from the bottom up to project down. And I just kind of use this line and this line now, okay? And what I'm going to do is I'm going to say, price is down here. I'm about to enter the trade. It's a reasonably wide candle, so I might be looking at a channel. So I might be looking at 261.8 to 423.6 as far as my projections go. I'm going to grab the bottom. I'm going to grab the top, and then I'm going to take a peek. Okay, and so I enter here. I know my stop. I'm gonna check my stop. So if I enter here at 109.4, I'm gonna need my stop to be, let's see here, 9.4. Let's see, 109.4 to 100 is 6 pips. 7, 8, 9. There's 11 pips right there. So let's just go. We'll go with 12 pips on this one. Okay, a little higher. So 12 pips. Okay, means I'm gonna put a stop loss at 1107 or 1106, and that means I need 36 to 40 pips. So if we have between squares, I'm just kind of checking here, 40, 50. So there's 20. So what did I say I need? 36 pips. So I've got 20, 40 to 261.8. So I could conceivably take 261.8, and very often I will. Okay, so what I do is I'm going to go set my stop at 105.3 and enter that trade at basically 109.5. Okay, 109.5 gives me 105.3. That gives me 42 pips. Okay, and let's go ahead and, for fun, I'm going to show you how you do this here. If you double click on your indicator, it brings up your fibs, and let's see, coefficient value. I've never actually adjusted this. Here we go. 161.8, 423.6. Add a curve. Let's see. I don't know why it's called a curve. There we go. 382. So it would be 1.382, right? Yeah. And it'll go in between the two, I believe. Let's just save that and see where it puts it. Ah, hold on. That's not right. I'll have to figure that one out. I've never used them before, so it's not really necessary. Where'd it go? Okay, there it is in the right position. 1.382. I'll have to... Okay, here I found some extras here online on Investopedia. So we have 161.8, 261.8, and 423.6 are the most popular. So 238.2 is what we want. So what we'll do is we'll go add a curve. I don't know why it's called a curve. Actually, 238.2. What I want to do is just give us, see if it helps. It didn't even pop up. So we're going to forget that for now, okay? I've never used it. You guys don't need to. 161.8, 261.8. I might find us an in-between here, okay? And then 423.6. So it would be higher than 261.8. I don't even see it, so forget it. All right? 161, 261, and 423.6. Anyway, we ended up getting stopped out on this trade because price moved up against us, made one more high before finally making that move. And that high took place at 2:15, 2:30 in the morning, my time. That's going to happen, okay? So let's pull in the other direction and try to find some difficult scenarios. Remember, we want to project down low, we want to pull up. We want to project a move up, we pull down. Let's go look for some others. Okay, this is a nice bullish day. I should say bullish bias day. And right at about, this is 12 a.m. this time, this candle breaks out of this channel. This is a real simple setup. Beautiful in the sense of the daily chart and the hourly chart. And all we want to do is project a profit target. So basically, let's draw a couple lines here. Let's just say we entered on this breakout at 1296. So we're going to come down. Here is 6 pips and 86. Let's see here. 1296. So there's 10 pips, okay? A little bit below the channel. So there's our 10 pip stop, which means if we entered here, we're going to need 30 pips, okay? So if we grab our Fibonacci retracement tool, we'll kind of grab these highs and these lows. We're going to pull down to project up. So I'm going to kind of click right about there. That gives me a line that's pretty much on the money, and I'll show you why in a second. And I'm going to come down to these real bodies right here and not necessarily this low. I know if I entered here, I need 30 pips. We've got 10 pips between squares here. So let's just go like this. Let's go, we've got 10, 20, 5. I'm going to need, let's go like this. Probably going to need 423.6 to make this one work. All right, so we'll just start here. We got 20, right? 1300 and then 1320. So there's 20, 40 pips right there at that halfway point. And we can sometimes make a stop there at 1340, okay? Or we can go for 423.6 because Fibonacci dictates if price is going to make it through this 261.8, it's going to make it to 423.6. And let's just see what happened. Beautiful. So if we took the 423.6, we would have been stopped out at about, let's see here, 5:30 in the morning. Right as you're waking up, pouring your coffee, you would come see you made $400. Simple, simple. Okay. We entered about, we'll say 9.5. Okay. So basically 5, 25, 45, and probably 55. Not quite 65, but probably 50 plus pips. Again, real simple. We pulled down to project up. We got our 161, 261, and 423.6 projections. We needed 30 pips to make this stop work. And keep in mind, guys, you can always adjust a stop. We don't want, we don't want to enter here and put a stop right here. That just doesn't make sense. We do want some sort of barrier to our stop. But if you have to do that, it's better to have the tight risk and go to bed than it is to have yourself exposed to unnecessary risk. So, in our case, we had entered here and we put a stop right in here. Maybe it was a little less than that. And it was, 10 pips. So we needed 30. This wasn't quite 30 here. It's more like here, which is kind of ironic. But we went ahead and went for the 423.6 and we exited here. Okay. So bear in mind, when you pull these projections, price is going to be right here. You're going to then, you're going to then come up to this level. Let's see here. Drawings, price all. You're going to realize this is not sufficient for your risk reward ratio, that you're going to have to go with the 423.6. With some practice, you could, of course, you could, anytime you want, you can set a goal of halfway between there if you like to be conservative. It's a good option sometimes, especially at 423.6. Just seems a little unrealistic based on your assessment on the hourly and daily charts. In this case, it was not. And what you'll do in this case is you'll go set a market stop at 1.1353 or greater. Okay, 1.353 or greater. Set a market stop when price reaches that level. Okay, let's look at a couple more. Okay, on this day we were slightly bearish. So we didn't necessarily want to skip a signal. We kind of wanted a breakout to occur to kind of confirm downward momentum. The daily chart was flat but with nice range in up and down bars, and the hourly chart was kind of confirming. I'll just show you real quick. We're right in here. So the daily chart was confirming that the uptrend, the current uptrend on this hourly chart has kind of been broken because we had this high and then this lower high. So our next goal would be right about this low right here. So we were bearish, and so we were looking for a bearish breakout to the downside. We got that, and by the way, this low is kind of an important zone for target purposes, and that low can be seen. Let me shut that off. On. That low can be seen right about here. So where we are at is, the breakout occurred in here. We grab our Fibonacci retracements. And I don't think it's going to work with the pin on. It's not. We're going to kind of grab this channel low and go up to this channel's high. We're going to pull up to project downward. And then we're going to look at, if we entered right in here, let's just call it 1240. If we put a stop at about 1247, Let's go a little higher. We'll go 1240. Let's just go 1250 to make it 10 pips, okay? So we got a 10 pip stop, which means we need 30 pips. We have 40, 30, so we've got basically 10, 20, 30. So we need to reach this level to maintain our risk-reward ratio. So we could go for the 423.6. And because it lines up so perfectly with this, this would be a good target. So we could set a 10 pip stop or tighter. We could have made it 7 pips, giving us a 21 target, which would put us at 10, 20, which would make this work in here, because if we entered right here, or a little bit lower than that, starting here we got 10, 20 plus. So if we had a 7 pip stop, we could maintain a 3-1 risk reward by exiting at 261.8, or we could go for the 423.6 because of our support over here and this. Oops. Let's see here. I'm using 2 monitors and trying to use this screen draw, and this high being failed by the following high, and looking to not necessarily take out this stop, but at least setting a profit target there, which puts us at this level right here, which is right where that 423.6 is. And sometimes you look for that kind of confluence, and that you can either tighten your stop up and go for the 261.8, set your stop at, where would it be, 1.218, or you can be confident at this level right here and set your stop at 1193, so 1.1193. Okay, little matter of preference there. Obviously, a little more risk going for the 423.6, but it seems realistic based on this lower swing high, which we're going to get into swing structure, and achieving that level right there. Okay. All right, guys, I don't want to make this video too long. Remember, you're going to pull up to project down, and you're going to pull down to project up. And we're just looking, I just want to focus on, I didn't mean to complicate things earlier, but just focus on, oops, let's see here, off, on. Just focus on this 161.8 to 423.6. Let's stick to the basics for now, and you'll be good to go. I would start practicing this in the past. Don't necessarily look to forecast in the future right now. Number one, on the daily chart, we're kind of moving sideways. The hourly chart shows, what did I say? Hold on. Yeah, we are just slugging sideways. I think that's what I said. If not, then I made up a new term. So we're just kind of slugging sideways. So, you know, the big move just happened. So this is kind of what takes place. Sluggish movement is usually what follows big moves, which is, it's got its potential, because if the retracement isn't going to happen, then the move down could be better. Okay, here's that sluggish kind of movement right here. We certainly could retrace. We certainly should look to project to a 50% retracement level of this move. But if we don't even reach 23.6, which is probably about right here, that means as we break through these lows, we should see an even bigger move down. That could be good too. So either way, we're ready. Right now we're sluggish. So I want you guys to take what you've learned and go back to the candlesticks where volume picks up and begin to project and just see what those projections do. And when I say volume where the candlesticks pick up, you can see how early, let's see here, let's see, this is early evening. So we open up about 2:15 p.m., you know, just kind of sideways action. And then we get busy at around, in this case, exactly, this one's 5:15 a.m. No, or sorry, right here, 12:15 a.m. Okay, in this case, it was much later before we got some action, but we don't have volume bars for Forex, so we've got to kind of zoom out and look at when the movement begins to take place. So whatever pairs you're looking at, go identify when that is. You don't need to go to a website and confirm that this pair is best during these hours. Just go look at when the action begins to happen, when the movement takes place for the most part. And then be ready to trade during those hours. You know, you might find trades that are great during the middle of the day for you, but you can set these up and walk away. You might find a couple of pairs that are trading starting at 9 p.m. your time. You can begin to look at your 3 time frame assessment and do the same thing. In fact, next week we will get into time frame mastery, how to navigate time frames for ultimate accuracy, and then we're going to cover some basic Forex fundamentals, the stuff that you kind of have to know if you're totally new to Forex. So I will see you next Tuesday with your next 2 videos, guys. Thanks for watching these. You have enough to begin practicing, and I'm available via email if you have any questions. mark@renegadetrader.com. Actually, do this. Use this email. I'm about to cancel Mark at Renegade Trader because I get about 400 spam emails a day. We're going to create a new email account called support. In fact, it works now. support@renegadetrader.com. So use that if you have any questions, guys. Thanks, and I'll see you in the next set of videos.